Even though most of the headlines coming out about Berkshire Hathaway and Warren Buffett are showing that he's continuing to sell stock in key positions like Apple and Bank of America, he's actually on a bit of a buying spree, and it's gone mostly unnoticed by mainstream media. I mean, just at the end of last year, Berkshire announced 2 new positions in 2 new companies, Domino's Pizza and Pool Corp. And just yesterday, he continued to add to his position in one stock that he just can't stop buying. And that's SiriusXM Radio. Yeah, the satellite radio company that your dad used to listen to in the car. Buffett's been buying this thing so much that he actually owns over 35% of the company. Let's take a deep look at this company and try to understand why Buffett would be wanting to buy a company that seems to be on the decline. And if you like this type of content, please consider giving us a like and subscribe so we can get more of this content out to more people. And if this is our first time meeting, hey, I'm David. I'm the founder of flankinvesting.com. And our mission is to bring intelligent investing into the mainstream. If you want to hear more about how we're doing that, there'll be a link in the description below, as well as a link to our free Discord. I really hope to see you there. Okay, so why would Buffett in any way be interested in Sirius? I mean, the stock has not performed well. It's down 52% over the last year. And it's down 65% over the last 5 years. And it's sort of a technology company, which Buffett famously tries to stay away from. In my mind, outside of the hard numbers, which we'll get to in a moment, I think he likes it for 2 reasons. First, and this is always a great reason to study a company, he uses and loves the product himself. Word on the street is that he loves the Sinatra station. And the second reason is it's a very simple business. In studying for this video, I read the annual report, and it is an astoundingly simple business. Buffett loves simple businesses. In fact, it's so simple that they have 3 easy to understand segments. They obviously have their SiriusXM business, which has 33.2 million subscribers. And that's subscription revenue, by the way, which all investors love subscription revenue because it's predictable. Which, by the way, that satellite business is a total monopoly. Also, and kind of unrelated, did you know that you need a satellite transponder to get satellite radio? It's kind of obvious when I say it out loud, but I never really thought about it since I'm a child of the internet. But they sell that device separately, and they actually work with car manufacturers to get it installed into all the cars, and that adds to their stickiness, which Buffett would definitely like. And then they also own all of Pandora, which I kind of forgot about. That has 5.8 million subscribers. But then they also have a really surprisingly strong podcasting arm. And some of their podcast hosts include Kevin Hart, Conan O'Brien, and they recently acquired Call Her Daddy. So it seems like they're starting to target a younger audience. Okay, that's the qualitative assessment. Now let's look at the quantitative assessment, because that's also really interesting. So if we pull up Sirius' company page and head to the business section and check to see if it's growing, we can see that revenue has grown 9.2% over the last 5 years, which is surprisingly higher than I thought it would be. And over the 9-year period, it was 8.8%, which is also really good. And net income was doing better a long time ago. It was at 11%. Now it's only 1.4%. And in recent years, they're doing an okay job. But this is definitely a red flag to me. Their total equity is going down pretty hard. They have a lot of debt, is what that's showing, and they took it in 2020. Total equity equals total assets minus total liabilities, so that's how I can immediately say it's debt. And free cash flow has also not been doing great. Over the last 5 years, it's been going down 4.7%. But if you look at it, it's really due to fiscal year 23, in which it dropped 22%. Whenever I see a metric drop by that much, I have to go into the annual report and try to figure out why. And so I did look it up. And if you remember what free cash flow is, it's operating earnings minus capital expenditures. And in fiscal 23, those capital expenditures went way up. And it's because 4 of their major satellites entered a maintenance period. So I wouldn't expect it to continue to trend in that direction. And the company has said in its guidance that they plan on aggressively paying down the debt. So you can start to see why Buffett likes this company so much. All in all, it is an interesting company, and it's surprising to see how much it has going for it right now. I would never have guessed that they would be able to sign Call Her Daddy. I'm definitely a little worried because I don't use the product, and I think things like Starlink could be a really big issue moving forward. But then again, it is a lot cheaper than Starlink. And they have a total monopoly on the business. So I think the business will be here for a while. And it's never a good idea to try to bet against Buffett or his lieutenants. There's a reason why he's the greatest investor of all time. So those are my thoughts on SiriusXM. Honestly, a business I didn't think I'd be studying this year. What do you think of the company? I'd love to know what you think in the comments below. But that's all for now. Thanks again so much for watching, and we'll see you in the next one.